So first-time investors, like the usual challenge we see, people have a misconception that they can occupy, they can live in the property they are buying within the self-managed portfolio.
So two aspects. So they're looking at how much you are contributing and how much rental income is or property is generating. Those two factors are used to key in there how much we can borrow. Right?
Yeah. So if deposit is weak and you're still gonna go up to 90%, then your income must be strong.
Should you use your super to buy a property in 2025? There's a lot of hype, but also a lot of traps. And so today I'm joined by Maninder Panu, who specializes in SMSF lending. And we're going to unpack about what really works and doesn't work in 2025. Hi, for those of you who don't know me, my name is Jadu Srikandan. I'm a buyer's agent for property investors, and I buy properties all around the country using a data-driven approach. So if you want to work with me, then go to my website, propertyframeworkbuyersagency.com.au, and book a session with me there. So now I've got a guest here today, and he's Maninder Panu from Avneet Financials, and he works with investors and buys properties for them using their SMSFs. So today is going to be a really practical session. We're going to look at the lending side of SMSF, what works, what doesn't work. So if you're buying a property with your SMSF for the first time, then this video will be useful for you because Maninder is going to unpack key things that you should know when you're going to buy a property with your SMSF. So Maninder, welcome. And let's start off with a quick introduction of yourself.
Thanks, Jadu. Thanks for the opportunity to join you in your podcast. I am Maninder Panu, founder of Avneet Financial Services, supporting investors for past 6 years with the motto to simplify investors the pathway to lending and grow their portfolio.
Yep. So let's get right into it, right, with SMSF lending. So compared to a few years ago, do you see SMSF lending, has it changed or is it pretty much the same? Have there been new rules that have come in place? How has that changed?
Sure. Certainly, SMSF lending has changed dramatically. In the past, it was a space where major lenders used to dominate, but now it's predominantly with the non-bank lender which play in this space. You name it, like Pepper Money, Granite Home Loans, Latrobe, and many other non-bank lenders. They are the major players, and largely major banks have exited the industry in terms of self-managed super funds. If we think about changing things, 2025, the rates are getting better and there are changes, there are proposed changes, the reforms in the taxation when it comes to how much assets you hold within self-managed super fund. Still, it's a proposal. It may or may not be passed, but there are definitely challenges coming up front.
Okay, all right. And when it comes to interest rates, so compared to someone buying in their own name and you're buying a property in your SMSF, what's the difference there? Are we seeing a higher interest rate for SMSF borrowing or is it pretty much the same?
Self-managed super fund borrowing is a little bit dear in comparison to your personal lending. If I can put a number, it's let's say about 1% higher than what you would take from a standard bank for your own lending.
Okay, and then, so we briefly spoke about which banks are actually covering the SMSF space, right? So you mentioned that it's basically the non-banks who are operating mainly in this space, right? And what kind of interest rates are we looking at in today's market? Typically, what rates are we looking at for SMSF lending?
So typically, the rate can start from early 6s and can go to high 7s. So it certainly dependent upon the profile of the applicant. It could be the loan to value ratios, their clean credit conduct, and many other things.
Okay, now let's talk about first-time investors. Let's say a first-time investor approaches you. What's the very first thing they have to consider before they jump and say, okay, I'm going to buy a property with my SMSF? Like, what, from a lending perspective, what are they going to look at first?
I'll say for the first time investor, when they are considering self-managed super fund, I would say first thing is to consider if this is the right strategy and the tool for them. They must seek an advice from a professional because self-managed super fund, they work really differently in comparison to buying a property in their personal name. They must seek an advice because the liquidity and other requirements can be very different. Once they have decided that this is the right tool, the steps can be documented and can be shared So like the first step would be to set up the self-managed super fund, which is the setup of the trust. This setup itself can take a bit of time, like 4 to 8 weeks. You would want to set up your SMSF trust first and then request ATO to roll over the funds which you hold in your industry super funds. At that point, once you achieve that milestone, you can start working with your broker to ascertain what's your borrowing potential looking like and what's the threshold of the property value which you can actually aim for.
Yeah.
Based on your situation. And then once you have sorted your borrowing potential, it's good to have bare trust set up, because it's really crucial to have that entity identified in which you will be buying the property. Then you get a pre-approval, identify the property, make an offer, and once you settle, you hand it over to your property managers, and then it's just ongoing audits and compliance. That's it. Very straightforward.
All right. So how much, like for an investor, like how much do you typically say they should have as a super balance, for them to start? I know this is very subjective, like different people give different amounts. I know a baseline is sometimes set as 200,000, but can you actually buy in your super with lower balances, like let's say 120 to 150,000? Someone who has that type of balance, can they buy or should they not buy?
Sure. There is no minimum requirement in terms of your super balance, but it's a good yardstick to follow. Like having 200,000 as a balance is a good starting point, but legally there is no minimum requirement to hold. So theoretically, the way I could break it down for you, let's say you are looking to buy a property up to $700,000.
Okay.
So if you are considering 80% lending, which would mean you are looking at about $140,000 in deposit, then stamp duty and other small costs that may trigger. And it's good to have a buffer of about 20 or 30,000 left over in your fund to look for some unforeseen expenses if they are to happen. So yeah, I would say it's good to have about 200 depending upon the value of property you are chasing, but legally from lender's point of view there is no minimum.
No minimum. Okay, so you're saying don't go all the way to your limit. So let's say you got 200,000, don't go all the way to 200,000, stop at around 180,000 and keep that 20,000 as a buffer.
That's
right.
correct.
Okay, for any other unexpected expenses that will come up. And so, you mentioned about speaking to an accountant. So should someone come to a broker first to exactly know how much they can borrow and whether they can borrow at all before they go and set up the SMSF? Do you think it's better to speak to a broker first and then the accountant, or the other way around? What do you...
There is no right or wrong over here. If you're cost conscious, it's good to have a discussion with the broker first. Have a bit of an estimate what you are likely to afford and what you can achieve. Then you can start your journey with an accountant. Otherwise, if you feel confident, certainly contact your accountant and start.
And so let's talk about misconceptions. So when you work with, you've helped so many investors buy with the SMSF. So what are some of the misconceptions they have, even from a lending perspective or any other, aspect, when they buy a property with their SMSF? Do you see that they're a bit lost at times? They're very confident and they know what they're doing.
When it's the first time, it's always the knowledge is good to acquire.
Yeah.
So first time investors, like the usual challenge we see, people have a misconception that they can they can live in the property they are buying within the self-managed fund. If you are looking for a residential property, you can't occupy that property within the SMSF. Yeah. Second misconception could be thinking that it can work pretty much as same as your personal lending, like buying for a home loan. It doesn't. It is very different. It's very, very heavily regulated industry.
Okay.
So it is different and you need to seek proper advice to jump in. Last but not the least, which I can identify, you can't improve the property you are buying with the borrowed money. So if you are considering buying a old property and then thinking of renovating it as your self-managed super fund, you can't use your loan funds to improve that property. That's really a big misconception among the first-time borrowers.
I guess just to clarify that point, because I've had a lot of investors who ask me that question. I guess when you do a little things like, painting the property, carpet change, or just tidying up the garden, I guess the things that need to be done for the property to be rented out, that could be done, but we're talking about major structural changes on the property, like major renovations or subdividing or adding a granny flat. Those are the things that probably would be restricted under the SMSF loan structure. But your minor renovations like painting or something like that should be perfectly fine, is it?
Repairs are permitted.
Yes.
Improvement is not permitted.
All right, no problem. The lenders typically calculate serviceability different when you're buying under an SMSF than buying in your personal name. So, for example, you could be capped out of borrowing capacity in your personal, but you're still eligible to buy under your SMSF. So, how, on a very high level, how are banks assessing someone's borrowing capacity when they're buying with their SMSF?
Sure, you did put it rightly that even if they are maxed out on their personal lending, SMSF is totally separate from their identity, and it can still work well if they are considering SMSF lending and investing. The way it works is the banks see on to the cash flow within the fund. So typically the cash flow would mean the contributions by your employers. If you are working for somebody, if you are self-employed, how much you pay for yourself within this superannuation, and then what's the rental income this fund is going to generate. Typically, these two things will determine the cash flow. That's what works for calculation of the loan borrowing.
So two aspects. So they're looking at how much you are contributing and how much rental income the property is generating. Those two factors are used to key in there how much we can borrow. Right?
Yeah. So they are the main factors which work for the cash flow, and then the lenders will deduct the expenses within the fund. Sometimes people have set up their life insurances or there are ongoing costs. Then those are the net cash flow, which is the income minus the expenses that works towards the loan borrowing potential.
And so what's changed? So when we look at loan to value ratios, now I know like with your personal name, you can borrow with a 10% deposit, a 5% deposit even today. With SMSF, your loan to value ratio or your LVR is typically much higher, right? So are we looking at 20% deposit, 30% deposit? What type of deposits are we looking at? Can they actually borrow with a 10% deposit? Is that possible today or no?
Yes. A short answer is yes. Most of the lending that happens in SMSF, it's up to 80% LVRs, but there are some niche lenders out there who can go up to 90% of the property value. That's correct.
Okay, so which means that if somebody wants to buy a 500,000 property, right? So 50,000, 10% is 50,000. Stamp duty, other costs, let's say we give it another 40,000, 30 to 40,000. They can actually get in with 90,000 then, right? For a 500,000 property and 10% deposit. There is a possibility there with someone who has a lower SMSF balance to consider these type of lenders then.
Yes, that's correct. It is a possibility, but we should be considering like a fee which is quite similar to lender mortgage insurance that does come into play.
Okay.
But in saying that, up to 90% lending is a possibility.
Okay. And it's the same non-bank lenders who are doing these 90%.
That's correct.
Right. Okay. And are they assessing like risk in a different way when they're doing a 90% borrowing? Is that being assessed differently, or is it pretty much the same way that they're looking at it?
It's pretty much the same. It just gets a little bit tricky when you are tight on cash flow within the fund. So the way the lenders look onto it, if you are considering, is it okay if I go deep into how the servicing model works? Right? So the way the lenders work is, if you are considering borrowing up to 80%, right, then to meet your objectives, lenders will allow you to go beyond the fund. They can allow you to make some voluntary contributions within the fund to achieve your objectives. But when you are considering borrowing more than 80%, which is a niche space, not many lenders do it, they want to restrict you at that time. They won't allow you to make extra contributions towards the servicing. You can do it, but they won't factor that contribution towards your servicing. So if you are really low on deposit, you must have a strong income to make it work.
So they're looking at that income factor there as well. Okay.
If deposit is weak and you're still going to go up to 90%, then your income must be strong.
Let's move on to how SMSFs are going to evolve, like moving forward. How do you think SMSFs will change over the next 5-10 years? Like, is it going to be something that might be more attractive to investors, less attractive to investors? What are your thoughts around that in the lending space?
I think it's a hard question, but in saying that, if it is structured properly, the interest rates go a little bit more sharper, and the rental yields on the property is strong, it can be a really strong tool to build wealth for anyone, because once the rental yield is good, rate starts to normalize, then it can be used as a really effective tool for tax planning and for generation of wealth. So from my perspective, yes, I see it to be a growing sector, and a lot of people are going to find it as a home for their investment journey.
Yeah, that's true. I think just to give you a quick example, a client story, they wanted to build out their funds in their SMSF. So they said the taxes, the capital gains taxes are lower in your SMSF. So you only pay, I think it comes down to 10% capital gains tax. So they said, let's have a strategy where we buy a property, sell off when the market peaks, take those profits and reinvest and just grow the funds that way, right? So the strategy was, we bought a property in Darwin for them, okay? So 600,000. The idea is not to hold it long term. We're going to hold it for 2 to 3 years. Maybe when that property becomes 900,000, for example, they sell it off, take that 300,000 profit, pay off that 10% tax, which is much lower than if they did it in your own name. And then they take that 300,000 profit and then they reinvest into other assets. And then they repeat the same thing, right? Going to the right market, sell off, and just build out those funds that way. So one of the strategies that, we kind of worked with the client recently was that strategy. So because of that lower capital gains tax that you just mentioned, because you mentioned that just came to memory. So that was one of the strategies that we recently implemented. And I'm sure you have worked with many clients as well with your SMSFs, helping them with complex situations. Is there any specific story that you wanted to share where you helped the client with a very difficult situation, buy a property with the SMS? Does anything come to memory?
So for example, like I came across a group of friends, right, who wanted to build a big investment asset for themselves, but individually as a couple, between husband and wife, they couldn't do it.
Yeah.
Their deposit, which is the fund balance, wasn't sufficient to meet the lending criteria, neither their contribution was strong enough. But they did decide to do it among the friends and ended up doing as 4 members to the self-managed super fund.
Okay.
So it was 2 friends and their wives, so which is like 2 couples.
Yeah.
They decided to pool their self-managed super funds deposit, form one entity, and then they invested together, and yes, they were able to achieve what they couldn't achieve individually.
All right, okay, that's very interesting. So they weren't able to buy, the funds were not enough to buy a property on their own, so they combined and they bought one property. Is it one property? Okay, and 4 people owning that one property under SMSF.
That's right, and you can go up to 6 members in
Right.
one self-managed super fund.
Okay, that's an interesting strategy. So you can pool it. Is there any restriction on who you can get into those, who can buy together? Friends, family, anyone you can combine, and as long as you trust them, you can just pool to get together and then buy a property. And okay, so up to 6 members.
That's
allowed.
correct.
I think we've pretty much covered most of the stuff from a lending perspective, like how much we can borrow, the interest rates, what people should be aware of when they're buying with an SMSF. So thank you so much, Maninda. And if anyone is looking to buy property with the SMSF and you want someone to help out with the loan, we've done mutual clients together as well. We'll work with clients together. Maninda is your person. He does a lot of SMSF lending. So feel free to reach out to him. I'll put his link in the description below. So that's all for today. And I hope you found this video useful. I'll come back again next week with another video. Thanks.
Thank you, Jadu.